if you're thinking of getting into the market, the narrative has been the same throughout, last year and even till 2021 year to date right now. The narrative is you
Mhm.
need to get, if you have plans on getting into the market, you need to do it now and not tomorrow. I offered on a property for a client. We were the highest bid at 150K over asking price, and the seller at the end of the day decided not to sell because they were expecting even more.
Oh
So,
wow, that's
yeah,
that's a crazy situation.
what I've done here is I've kind of summarized three properties that were leased out in the month of July and August. These are our typical investment properties that we focus on, detached bungalows. As you can see, they all have 3 bedrooms, 1 bathroom, 3 bed, 1 bath, 3 bed, 1 bath. This was a property that was purchased a couple weeks ago for 825. It's a turnkey legal duplex. I hate to say it, but if you're in the market and you want to get in, this is the time to get in.
What is up, YouTube? Matt McKeever here, and we're back talking about Oshawa with Saman. Hey, how's it going?
Hey, Matt. Great. Thank you very much. Nice to be back again.
Yeah, and so I'm excited to hear what's going on in your market, what's going on just with you yourself and your business and real estate. And just, these days it's so hard to know. There's so many different rumors and people saying market's about to go up, market's going to go down. And I really
Mhm.
like to just kind of leave that noise at the door and dive into the data and talk to local experts. So before we get into the presentation you put together, what do you think we should be aware of?
Um, yeah, you know what, Matt? I've been watching some of the videos that you've been doing with some of the other local experts, and you're right. It seems like there's a mixed message. And every market is different. That's why we have experts here from each town and each area talking about what's going on. But I can tell you that high level summary of Oshawa, things have not slowed down for us here. There are scenarios where we are offering multiple. There's multiple properties that we're interested in putting in offers, and I'm still seeing that there are 10, 15, 20 offers on properties. Some are selling. I'm finding that the expectation from sellers is also very convoluted right now. I had a personal scenario where I offered on a property for a client. We were the highest bid at 150K over asking price, and the seller at the end of the day decided not to sell because they were expecting even more.
Oh,
So,
wow. That's
yeah,
that's a crazy situation.
first time seeing this, high level summary of the numbers. They bought the property last year for 525, I believe it was. Have not touched it since. Listed it for 588. We offered 735 on the property, and the seller's expectation was a lot higher, and they decided not to sell. I thought, let me give them a day to kind of think about it, sleep on it. I'll follow up the next day, which I did. But it turns out that the seller was convinced that he needed at least 800K to sell. Keep in mind, this is a property that has not been touched and is in as is condition. Like, it requires 100K of work at minimum.
Mm.
So a few greedy sellers out there, let's put it that
Yeah,
way.
well, I appreciate you sharing that though, because again, those little anecdotal stories are so insightful to, hey, maybe this is the psychology where a bunch of sellers are at, and we need to be aware of that because it can impact how you approach a negotiation. Or also, if you're looking to buy, don't get your heart set on it just because it's got a low list price.
That's right. As we know, these prices mean nothing these days.
Hmm.
So treat it with. That's why you need the expert to kind of take you to reality right before you go to offer presentations, and make you really understand what this property should have been listed at versus what you're offering.
Yeah, appreciate that. And so let's jump into it. I know you've got a great presentation put together for us here.
Yeah, absolutely. Kind of building on the illustration that I had from our last presentation, we have January till July. Um, as you can see in July, our number of listings were continuing to go down from the month before, and the number of sales also dropped dramatically. Um, and I remember that the last time we spoke, we were looking at the May to June data, and we were looking at the decline in the number of listings and that stable number of sales. And we said that what are we expecting to happen in July, and we had both, I believe, but we had both said that we were noticing that the market is a little slow right now. A bit of that lockdown that's carrying over. And then what I pointed out here is the Ontario reopen.
Hmm.
I know that I noticed a lot of people were excited that Ontario was opening, restaurants were open, they were able to go out. And I was, evidently seeing the number of listings on a day-to-day basis being lower, which kind of, explains what's going on here. New listing 250, which is almost 150 less than the month before. And sales have did drop in July as well. Now, if we look at the months of inventory, it's still fairly stable since January, right? So we have 1.17 months of inventory, which is really low. It tells us that it's a seller's market. It's going to remain a seller's market. And average prices, sure, it dropped, from the month before down to 784,000, but we're not talking about a dramatic drop in prices.
Hmm.
And the one factor that's been stable is the number of days that it takes to sell a property. Less than 2 weeks, which in my opinion, it's still a short number of amount of time. And I would say, in fact, it's probably even lower when you look at specific properties. I'm finding that properties are listed and they're sold in a week or so. The PDOM kind
Hmm.
of accounts for those properties who perhaps were maybe priced incorrectly and had to come to market for another week. So it captures, the full listing every time that it comes off and goes back on the market.
Yeah, to be honest, I'm shocked at the low level of both sales and new listings. Like, obviously, people decided they wanted to enjoy their summer, they wanted to take a break a little bit from real estate, but at the end of the day, from a months of inventory perspective, it really didn't move the needle in either direction. So that's
No,
really interesting to see.
yeah, you know what, Matt? I was having a conversation at a listing appointment, and my sellers were a little worried because they were saying that June numbers were, number of listings were low, but prices, obviously, as you can see, prices were 796, but they were kind of concerned about the listings being low, and I had explained to them that this isn't in fact doing us a favor. Like, less listings
Hmm.
is a good sign for us. Technically, it should drive up the sales price, and evidently in July it didn't. But I have a slide where I'm kind of talking about my August predictions, and I'm saying that I'm expecting August to be higher. But kind of going back to my sellers being worried about what was going on in the market. Sure, inventory was low, but we really got to see it. So I had mentioned to you that I have an offer presentation coming out this evening. This is a 2-story house that we have listed in Oshawa for 649. We've had 130 showings on the property.
Oh,
It's
wow.
absolutely insane. Yeah, so we're expecting to break a record tonight for the street, but hey, let's just see where it goes, and maybe next week we could talk about it. But yeah, you're right.
Yeah.
The numbers are low.
That's exciting, but obviously the number of showings that tells you something.
Exactly. Yeah, it kind of tells me that July. Yes, everyone was taking a breaker, maybe going camping or long weekends,
Hmm.
taking some time off. But it looks like everyone's back into work and back into business, and people are hunting for properties right now.
Hmm.
Um, just a a brief bar chart. We've talked about this. A slight decrease in average sales prices, but nothing dramatic. If we kind of compare it to year over year price increases, we're up 29%. So Matt, to me, this is really important because last year in July, I was having a hard time convincing people to purchase properties. Um, I did. I do recall one example where a client did pull the trigger and did purchase something, and I'm looking at that person and saying, "Good on you." You
Hmm.
put all the drama aside and you focused on the data, and now you're up 30%. We've had the conversation of, "Hey, should we sell the property now to cash out?" But they're so happy. They purchased it at such a discount. They have tenants in there. They're essentially living rent free right now. They're living mortgage free at this point. So
That's
I'm
awesome.
super pleased with how that's worked out for my clients.
Mm-hmm.
August 2021 expectations. A lot of people, of course, are seeing the low inventory and are worried whether they should get into the market or not. They're going to be paying a premium. But over here, Matt, I've kind of summarized 14 properties that I was monitoring myself, whether it was an investment or a turnkey property. And the 14 properties, the average price on them is $800,000. So I'm expecting the market to remain strong. And I think the message that I want to get across here is that if you're thinking of getting into the market, the narrative has been the same throughout, last year and even till 2021 year to date right now. The narrative is you need to get, if you have plans on getting into the market, you need to do it now and not tomorrow. And all I essentially wanted to show here was that July, our average price was around 784, 764, somewhere in that range, and I'm expecting August to be around 800K. So I know I'm. It may seem that I'm coming across as a realtor, and I have the motive to get people to purchase, but the data shows that we're seeing a steady increase. So I hate to say it, but if you're in the market and you want to get in, this is the time to get in.
Yeah, and I appreciate you kind of diving into these numbers and trying to forecast a bit into the month of August, because that is a really useful aspect here for any audience members. And I think the big thing is in this market, if you want to be in the market, 100% agree. You need to get into the market, and the key is you need to know exactly what you're trying to accomplish as well by getting into the market, because it can be so easy, as you mentioned, to get hijacked by emotions, whether it's, maybe parents saying, you got to buy now or you'll never be able to buy, or on the opposite side, don't buy now, prices are at an all-time high. And, what is our goal? What are we actually trying to accomplish here? Because this isn't just about like trying to perfectly time the market. Normally as an investor, it's either you've got capital to deploy, or if you're a retail buyer, you're looking to buy a house to live in. And again, oftentimes people think they want to try and time the market in that aspect, and then their emotions can't actually handle that emotional roller coaster for months on end.
Yeah, that's right. And I would just add to that comment that you made, that although prices are increasing, we spoke about this last month as well. Rent prices are increasing as well. So if you're buying that investment property where you're going to be living upstairs, chances are the rental income that you started thinking about that you can generate is actually higher. So I've summarized some rental income data as well that we'll go over, but it's phenomenal what people can get for their 2-bedroom basement these days. So again, there is a saving grace. If you're buying the right property that has the opportunity to generate rental income, it's likely that you're going to get more than you think. There we go. Let's jump into the rental. So what I've done here is I've kind of summarized 3 properties that were leased out in the month of July and August. These are our typical investment properties that we focus on, detached bungalows. As you can see, they all have 3 bedrooms, 1 bathroom, 3 bed, 1 bath, 3 bed, 1 bath. And I've tried to kind of summarize, Matt, the different neighborhoods, McLaughlin,
Gotcha.
Lakeview, and Eastdale, and kind of give you a sense of, what the areas are and what they're generating. And this is the map that we had last month that we talked about. And essentially, McLaughlin, one of the areas that we had, generating $2,450 for the upper unit. Eastdale, which is just on the other side, $2,500 a month. And then Lakeview, which is considered that C-type neighborhood, is still generating $2,200 a month. As I said, I'm pretty bullish on the Lakeview neighborhood, and I don't want people to get distracted by this C rating here. The fact that you're generating still great rents, you're $200, $300 away from the A-type neighborhoods, is phenomenal, because the price difference here, I can tell you that the price difference between the A neighborhoods and the C neighborhoods are a little dramatic in terms of purchase price, but the rental increase or decrease is not as dramatic, the price increase or decrease.
Yeah, I appreciate you highlighting that. And the map really helps paint a picture here.
Yeah, and then if we just kind of look at the lower, what the lower units are selling for or leasing for, sorry. Again, same thing. Typically, these lower units have 2 bedrooms, 1 bathroom, 2 bed, 1 bath, 2 bed, one
Hmm.
bath. Again, different neighborhoods, and as you can see here, I've again try to work around the map over here. We have Vanier, O'Neill neighborhood, and Fairwell. So some further north, some central, and some south. And it looks like the data is showing that they're mostly in the $1,900 a month range here.
Hmm.
And Matt, keep in mind, and I'm sure you being in the business, as well. Not all rental leases go through MLS. A lot of people are doing it
Yeah.
off market, doing it on Facebook Marketplace, Kijiji. So in terms of data, the data is very limited, but it's a good
Hmm.
sign that with limited data, we're still seeing premiums.
Yeah, absolutely agree. I don't have statistics on it, but I imagine 80, 90% or more of leases actually probably don't go through the MLS, but
Yeah.
it can still be a decent barometer just for kind of touching, like getting that feel for where is the market at.
Yeah, absolutely. And I can tell you that when people are looking at properties and when they're budgeting for their basement rental income, from the conversations that I've had, people are not using these numbers. These
Yeah.
are around $1,500 to $1,600 a month.
Hmm.
So, MLS is the data is showing that $200 more.
Yeah, really appreciate you highlighting this.
Yeah, absolutely. Next thing that I wanted to do was I want to take you through a purchase that a client of mine made. And the whole point here is to show you that, one, what is the reality of Oshawa, and two, do the numbers work? We've talked about
Hmm.
this in the past, but I think it's good to show that it's still working, and we're what we're preaching, where our clients are actually listening and taking action. So this was a property that was purchased a couple weeks ago for 825. It's a turnkey legal duplex. However, it's not newly renovated. So the renovations are probably from 5-7 years ago, but you can very well move in and essentially bring in new tenants and start charging rent. So purchase this for 825. We were actually not the highest bidder on this property, Matt, but one of the things we did during the negotiation phase was we said we will assume the tenant and we will deal with the tenants ourselves. The tenants were paying low rents. We knew that turnkey duplexes in Oshawa were selling between 850 and 875. So the way we kind of justified this price to our buyer with assuming tenants is that if we can purchase this for 825, this property should be worth around 850 vacant. So technically, we have 25K to play with in order to get rid of our tenants, the tenants that were in the property. And sure enough, we were able
Right.
to get the tenants out for a fraction of the cost. Um, and what's going to happen is that we're going to charge $2,200 for the upper unit, 1,850 for the lower. There's a big detached garage in the back that we're gonna try and charge $100 a month for. We're gonna look for a small business owner who needs storage space, something along those lines. Try and bring in just some additional rental income. Our total income should be $4,150. Our fixed cost of mortgage payment, property tax, insurance, and then we still have some of our soft cost, not soft costs, or some of our variable costs as well here.
Hmm.
So at the end of the month, we are going to be cash flowing $640 a month again, which is not crazy, but he's going to be managing the property himself, so he's not going to be charging a property management fee. So he's almost around $1,000. And then if we look at it from a return on investment point of view, initially when I do my assessments, I always have annual appreciation at 0%. But I think I've come to the realization that it's really not a realistic return to show to my clients, because the reality is there is going to be appreciation. So let's factor in appreciation, but let's do it at a very, very conservative rate.
Hmm.
As we spoke about in the numbers, last year to this year, our appreciation has been 26%. But
Yeah.
let's just go with 2% and see what it does to the
Hmm.
numbers. And I believe with this at 0%, we were at 14%. But with 2% appreciation, we're going to be at 23%. And essentially, what I'm telling people is that forget the cash flow. you're not getting in the business of getting rich based off cash flow. Cash flow is just for the purpose of servicing your debt and not being out of pocket. Let's just focus on appreciation and mortgage pay down. We're essentially making $160,000 in appreciation and mortgage pay down. So, which is, a great investment, and you're going to be getting 23% return on your money invested. In my opinion, this was a great purchase. He paid a premium, probably the highest on the street, but who cares? We're still making great returns here.
Yeah, this is why it's so important to know what you're trying to accomplish as an investor, because so many people get caught up playing mental games with themselves where they're like, there's no way I'll pay over $175,000 more than they're asking in order to do this. But like, hey, does the deal actually fit within the criteria that you wanted from your investment perspective? And, this example you laid out for us is great, because I think it can be difficult for sometimes people to come to terms with that idea of paying a lot more over asking, because maybe the last time they bought a property was 4 or 5 years ago, and that was in a completely different real estate market. Where again, if you focus on the numbers, if you know your fundamentals, it can be easy to move forward with confidence on deals like these.
That's right. And I think you said it best. Where that advice comes from for buyers is also very important. I've had number of conversations with people where they're getting guidance and advice from their parents, and just the numbers that they're using is just not realistic. The rental rates are not realistic. It just doesn't make sense. So it's really nice to show them the data, and the fact that we've done this now very recently with a client should be a good indicator that it works. I want to really talk on this, and I think you can relate to this, and I want to get your comment on these. But I'm finding that some people, especially investors, they're saying, I'm not interested in competing with offers. I'm just going to sit and wait until this whole offer scenario, this multiple offer scenario is gone. And essentially what I'm telling them is that, the fact that you're competing with other people should not be a decision criteria for you. The reality is you're going to be competing, whether you're buying on market, off market. You guys are in the wholesale business, and I assume that you have multiple people going after the same property, correct? So, in my opinion, it is what it is. If you're competing, hey, don't put in an offer with emotions. Just put in a number based on financials.
Yeah, I think it's so important to understand too that like people again get too emotionally invested in the offering process, and hey, like in order to play a game, you have to be willing to lose sometimes. So there's going to be times that you're in that bidding war and you're going to lose it. But for me, each one of those is actually an experience. Like I'm gaining experience points, I'm gaining a new data perspective, and I'm getting more used to the process. And I think that's really important for people to keep in mind.
That's right. You're creating a benchmark in your mind. And it's a numbers game. The more offers you put in, you're likely going to win one or two.
100%. We've got a saying here that I used to say all the time is like, if you want a deal, you have to make an offer. And so we literally distilled it down to like offers, deals. It's a chant I literally make my team say, just because it's really important people remember that the only way you get a deal is by making offers.
That's right. Yeah, that's right. The other two factors is sometimes if people can't do an inspection on the property, they're not interested. And my explanation around that is that, look, the reality is if we're going to be doing a legal duplex on this or whatever the case may be, you're likely going to be doing everything all over again. So don't walk away from a deal just because you can't get an inspection. If anything, if you really want an inspection, you can still do it after the fact, and you'll still have a list of items that you can fix. And the reality is in this market, even if you did find stuff throughout the inspection, sellers are not going to be entertaining any price reductions, at least not that I've seen in recent months. I would also say, bad or low paying tenants. In the example I gave, property we purchased, in my opinion, this is one of the ways that you can get a discount today or have the upper hand in an offer negotiation. The fact that you're going to take on the tenants, deal with them, pay them cash for keys, in Canada, what I found is that, or not Canada, I would say in business, you're essentially paying for convenience. If you can provide some sort of value, some sort of convenience to someone, you are likely going to have the upper hand, whether it's negotiating, trying to win an offer, or what it is. Now, we've done this a few times this year, and it's always worked out well. We've asked for a discount, gotten it, and then we've dealt with the tenant, and I'd say 9 times out of 10, it works out fairly well.
Yeah, 100% agree with you, Saman. And the one thing I really want to hit home on is like, for anyone watching this and they're like, I don't know, maybe that sounds too good to be true that I'll be able, like, we literally every piece of clothing I wear says problems or profits. And the reason that we highlight that is it's so important you understand you're in control. You can come up with a creative solution to overcome that obstacle or that problem. And the deal you highlighted earlier, the idea of like, hey, we think the property is worth $850. So if we actually get it for below that, that gives us some play in order to do cash for keys or negotiate with the tenant. And again, so many people overlook great opportunities because they lack that creativity, or they lack someone like you in their corner breaking down for them and explaining like, hey, let's not get emotionally attached to this. Let's actually just look at the numbers. The numbers say we can actually pull this off.
Yeah, exactly. Yeah, exactly. I would actually say that it's funny. We had a sales meeting at our office, and we spoke about this. And some of the agents, were kind of puzzled. They were saying, we've never really thought of doing that. It's, we consider it to be a lot of risk for our clients. And I respond to that and say, what isn't a risk? You're buying a property without a financing clause. That is a way bigger risk than assuming tenants that you're going to have to pay $3,000-$4,000 to leave. Versus, you're okay advising your clients not to put in a financing clause and perhaps losing a $20,000-$30,000 deposit, but a $5,000-$10,000 payment that you have to make on the very extreme end. You consider that to be risky. It doesn't make sense. And I think it just comes to experience. There's a lot of agents who just work with the simple buy and sell.
100% agree with you. And that's the whole reason we do this, guys, is I want to highlight for you local experts that actually not only are talking the talk, but they can follow it up by walking the walk. They've got the experience. They understand what we should actually be focused on as investors. And again, I think you've done a great job of just highlighting that for us today.
Thank you. Appreciate that. And Matt, last thing I kind of wanted to do was, give you an investment highlight as to what's going on in the Durham region. One of the things we spoke about was that Oshawa is such a healthy market, and we're noticing a price increase, year over year, healthy. And one of the reasons why I think that's happening is because the surrounding area, the Durham region, is growing at such a good pace that even if there's investments going on in Ajax, it benefits Oshawa. In Whitby, it benefits Oshawa. So here I have a list of a few things that are happening right now in the area. Just kind of wanted to high level touch on them. So the Amazon distribution facility, Amazon is taking a big footprint here in the Durham region. They have plants in Ajax and Whitby, and it's essentially they're creating like this huge complex where they're essentially going to be fulfilling orders, and the whole plan is to like service the Durham GTA area. And I think the goal is that eventually you're going to be able to buy something off Amazon and you're going to have it within like the same day or within like 2-3 hours. So they're strategically creating these fulfillment centers, and as a result, creating jobs. I know in Ajax, they've said they're going to have somewhere around 1,000 full-time jobs. In Whitby, they're going to have what they labeled as hundreds of jobs. I don't know what that number is, but hey, it's still a healthy number. The OPG in Pickering, right now they have 4,500 jobs, full-time jobs, and that's protected up until 2024. So, we know that they're doing a lot of engineering here, and there's, the test centers, there's the, they're a huge employer here. Let's put it that way. A lot of people who work in the Pickering plant perhaps live in Oshawa, and the fact that, they still have employment, they love it. Some of these engineers are, graduated from school, living in a smaller house. Now they're upgrading and buying bigger properties. They have, great pay. So they're helping the market grow as well. Durham Live, that's the new casino in Pickering that has opened recently. By the end of the project, they're going to have 10,000 full-time jobs created there. And the Pickering Casino, it's essentially supposed to create a Vegas experience where you have the casino, you have the hotel, you have restaurants, you have nightlife. There's going to be movie studios there. So it's going to be a huge attraction, and it is a huge attraction. And the fact that, it's bringing in new jobs, it's bringing in tourism, just helping the area grow over time.
Mm-hmm.
And the last thing was General Motors. We spoke about this last time. New investment that they made is going to create 1,700 full-time jobs, and it's phenomenal that they're still here and create jobs still. So that's a bonus. And the last thing I wanted to touch on was the Thermea Spa in Whitby, and that's going to be it's a Canadian-owned indoor-outdoor spa that's being built in Whitby right now. There's a couple of these around. There's one in Blue Mountain. There's one in Ottawa. I think BC has it as well. And it's essentially going to be this nice outdoor experience where you're going to have, I believe there's like 10 outdoor pools. There's a few indoor pools. There's various different indoor saunas, whether it's steam, hot rocks. They have shows in the sauna room. So it's a really cool experience, which is coming to Whitby. And I just think it's going to be, a big attraction. And I would say that if you have properties in the Durham region, specifically in Whitby, depending on where it's likely going to be a very good Airbnb play.
Yeah.
My principal residence is, walking distance to this place. So I've even thought about, what I'm going to do when this place is built. I'm thinking of going and living with my parents for a few weekends and generating some good rental income from Airbnb here.
Absolutely. Yeah, that looks beautiful and certainly seems like a natural tourist draw. So yeah, that's exactly where my mind immediately went to, was there's probably an Airbnb play here.
Absolutely. Absolutely. Yeah, that's it, Matt. That's it for this month. I wanted to keep it short, brief. We talked about the numbers. We talked about what's going on in the market, and kind of high level what's going on in terms of new development in the area that's really bringing people to the Durham region.
Yeah, really appreciate you just sharing your expertise and insights in regards to what's going on in the market, Saman. And I think, again, this was a perfect example, in my opinion, of why you need to make sure you're stacking your power team with local experts that really know what's going on. And yeah, I think that this presentation speaks for itself. Really appreciate you, though, just giving those insights, as well as sharing those anecdotal stories and examples of deals that clients have done in the past, because for so many investors, I know it can be intimidating sometimes if you're taking the step from just analysis paralysis to actually pulling the trigger or reaching out. And that's one other thing I want to highlight, is that it's important in these hot markets that you start developing a relationship before you're ready to buy. So, it's much better to reach out to someone on, say, a month or 2 months or 3 months before you're actually going to really be actively in the market, rather than, hey, I saw this property on 123 Main Street, I want to buy it right now. I'm sure in theory that sounds like a realtor's great situation, but in actuality, it's much nicer to get to know your client, really understand, is this going to be a good fit for them? Because I'm sure oftentimes when new listing comes up, you probably have insights into what's going on in that local market, what sort of rents can actually be attained in these, because again, as we mentioned, that difference between $1,500 and $1,800 or more a month, that can really impact your ability to finance or afford the property or justify wanting to own that individual property.
Yeah, absolutely, Matt. And what I'm noticing is that sure, people are coming and they have a plan, and even some people who have real estate coaches, the coaches are teaching them a lot of great knowledge, and they're sending them off to find a realtor to build their team. And then we're noticing that when they come, one of the first conversations I have is, are you qualified by a mortgage broker? And oftentimes the answer is yes. And they give me a number. And after I ask a few more questions, get an understanding of what they do, the number seems off. It's up until that point where you kind of ask, okay, what kind of qualification did you ask for? What did you tell the broker that you're going to purchase? If you're purchasing a property that already has rental in the lower unit, that can likely improve your qualification amount. So also, I would say, sure, the realtors are key pieces of the puzzle, but the mortgage brokers, and making sure you work with investor-focused mortgage brokers who understand the business, I'd say is another game changer that you need to have in your corner.
Absolutely. And so if you guys want to reach out to Saman, if you want to learn more about what's going on in Oshawa, we're going to have links to all his contact information in the video description down below. Really encourage you guys to reach out, and just appreciate you sharing your wealth of knowledge, and looking forward to talking to you next month.
Thanks, Matt. Yeah, let's chat next month.